When we invest in a closed system, right? So that means there's no way to get out of the system. If you invest in bonds, which I call fixed income, if you invest in cash or currencies, which I put that part of fixed income, that's fixed income, right? Then you have equities. So you have equities, you have fixed income, you have commodities, and you have real estate. It's those four different assets, and that's it. Now, yeah, you can break down any one of those assets to smaller and smaller and smaller sub-asset classes, but that's it. We only have 4 asset classes to invest in on this planet. Now, that's important, and you've heard me say this before, because if something's going wrong in one of those asset classes, let's say equities, and most people don't say equities, they say stocks, then that means money is going to be moving out of that asset class and it's going to be moving into a different asset class. And there's not 500 asset classes for that money to move into. Literally, there's only 3 other ones: real estate, commodities, and fixed income. Now, I will point out the pounding in the background. We have like 10 workmen here, and so you will hear some pounding going on in the background. And just let that be okay. So if something's going wrong in equities, it's going to show up in these relative relationships, right? We will start seeing more money go into commodities or real estate or fixed income, because those 4 together are the closed system. That's it. There is no place. You can't invest on Venus or Mars or in a different galaxy. We just have those 4 asset classes. And when you keep it powerfully simple and realize that we invest in a closed system, whether you're a Chinese person living in China, or a Singaporean living in Singapore, or an American living in America, or a Brit living in the UK, and so on, we're still the same closed system. And since 1995, when Netscape IPO'd, the world got a lot smaller. That was really Gutenberg's printing press 2.0. So why am I telling you all this? There's so much talk going on with the market peaking and things are about to collapse and crash. And so I literally took some notes here. I was looking over and I want to point out 10 things to you. So here's the thing. The advanced decline line, that's showing us how many stocks are advancing and how many are declining. It is hitting lifetime highs. Lifetime highs is not a signal of a market crash, right? Then we have the Dow Transports. Those are hitting lifetime highs. When the Dow Transports hits lifetime highs, that's not a sign of a market crash. Then we have the Dow Industrials. The Dow Industrials are hitting lifetime highs. When the Dow Industrials are hitting lifetime highs along with the transports, that's not a sign of a market crash. Then we have small caps. They've just hit a lifetime high, not a 52-week high, not a 52-day high, not a 52-hour high, but a lifetime high. When small caps are hitting lifetime highs, that is not a sign that the market is about to collapse. We have mid caps hitting lifetime highs. These are not signs that the market is about to collapse or crash, regardless of what fundamental information is saying. Follow the price. We are in a closed system. And then you have the MSCI European Index. They are hitting lifetime highs. So we have, I need to add this all up, we have literally 6 different indices hitting lifetime highs. That is not a sign of a market that is about to collapse. Now, I start off talking about how we live in this closed investment system. So if bad stuff was happening and was going to happen and is about to happen, and bad stuff is an official economic term, right? We'd see the money flowing somewhere. Right? And so the question is, where does money flow when people start getting concerned? And the answer is really only 2 places. One, US dollar and bonds, okay, and Japanese currency or Japanese yen and bonds. And so I looked at the 10-year US Treasury. Here it is right here. And you can see money is not piling into it. Yeah, it's not heading, straight up. Money is not flowing into the US Treasury. Also, look at the US dollar. Money is not flowing or getting scared into the US dollar. And then you move your attention to the Japanese 10-year Treasury. Same thing. You're not seeing people panic buying into the Japanese 10-year, I said 10-year Treasury, Japanese 10-year bond, and you're not seeing people get scared into the Japanese yen, right? So we live in this closed investment system, and when you keep things powerfully simple and simply powerful, you're really able to start to finally eliminate the noise, get that investment stability, get that investment steadiness, and say, hey, you know what? I will have enough money. I will not outlive my money. Thanks, guys, for being in my world. This is just another step in helping you protect your portfolio and your future. And hey, guys, if you value this content, please like, share, and forward it because it makes a difference. Okay? I'll speak to you next week. Bye.